Hello, welcome everybody to today's session on the power of supervisory technology for market conduct supervision. My name is Jennifer Chen. I'm a senior financial sector specialist in the financial inclusion and consumer protection team at the World Bank. For those of you joining the FIGI symposium for the first time, I'd like to briefly introduce FIGI. It's the Financial Inclusion Global Initiative. It's a partnership between the World Bank Group, the Committee on Payments and Market Infrastructure, and the International Telecommunications Union, funded by the Bill and Melinda Gates Foundation to support and accelerate country-led reforms in financial inclusion. So FIGI funds implementation in 3 countries, China, Egypt, and Mexico. It supports working groups to tackle 3 outstanding challenges for reaching universal financial access. That's electronic payment acceptance, digital ID for financial services, and security, infrastructure, and trust. And it hosts this series of symposia. This is the 3rd and final edition of the FIGI Symposium, which provides a forum for dialogue among telecommunications and financial sector authorities, financial service providers, digital financial service providers, and other stakeholders. Today's session is focusing on supervisory technology for market conduct supervision. If we can move to the next slide, please. So why this topic and why the importance of this topic? I think, as probably the majority of the audience is well aware, digital financial services and fintech, they've really introduced a wide range of innovations to the financial sector in terms of new products, new types of providers, and new innovative methods to deliver products to consumers. And all of these innovations have benefited financial inclusion by expanding access to millions of new users, to new and innovative products that are often lower cost and are more tailored to meet the needs of consumers. With those innovations, though, there have come a range of increased risks and new types of risks to consumers who may be new to the financial sector and may be more vulnerable to these types of risks. Protecting consumers against risks in the financial sector is always a challenge in many markets, particularly in emerging markets and developing economies. And this has only been heightened by the introduction of digital financial services and fintech and the range of new business models and new technologies being utilized. It poses a significant challenge to market conduct supervisors. At the same time, there are increasing numbers of innovative technology solutions that can be leveraged by market conduct supervisors to enhance the efficiency and effectiveness of market conduct supervision. And today's panel focuses on shining a spotlight on some of these new and emerging solutions that are being utilized around the world and are quite exciting in trying to help improve the capacity, the always limited capacity of market conduct supervisors, and really adapt to be able to effectively monitor risks and protect consumers in the new financial sector. With that, I'd like to introduce the session, which will start with a presentation by Mac Wallace, who is the co-author of a new World Bank technical note on SupTech solutions for market conduct supervision. Mac is a former financial regulator at the Consumer Financial Protection Bureau in the US, where he helped pioneer the CFPB's innovative consumer complaint system and public complaint database. This will be followed by a panel of distinguished speakers who will be sharing their direct experiences implementing SupTech solutions in their respective financial sector authorities. And we will have some time for Q&A after the panelists conclude. So please feel free to submit any questions you might have throughout the session using the Q&A function, which should be at the bottom of your screen. We will also be recording this session and sharing the PowerPoints online after it's concluded. With that, I'd like to hand it over to Mac to present the first presentation.
Thank you for the introduction. Next slide here, please. My name is Mac Wallace, and I'm a co-author of the World Bank's note on SupTech solutions for market conduct and a former market conduct supervisor myself, as Jennifer shared. As Jennifer also shared, we'd like to share insights contained in a recently published paper on SupTech solutions for market conduct. And the objective of the paper that we recently released is to assist financial authorities to both enhance the efficiency and effectiveness of their market conduct supervision programs by really providing concrete examples of situations where SupTech can be leveraged. Within our paper, we'll share a flavor of the insights contained within it today. We categorize 4 types of SupTech solutions for market conduct, catalog roughly 18 SupTech solutions that authorities around the world are using and can be leveraged by others. We go into the rationales behind why are regulators today adopting SupTech solutions, as well as we learned that SupTech solutions aren't just about the solutions themselves, but also around the people, processes, and underlying IT that support them. And then lastly, the paper goes into practical considerations for those looking to implement SupTech solutions to drive a data-driven supervision program. So today we'll share a few key insights from the paper before we then turn it over to our panelists who are case study examples of each of these categories. Next slide. As you can see here, our note draws on a wide range of regulatory experiences and is the culmination of primary and secondary research with 14 financial authorities around the world. Next slide. To begin, I think it's important to really ground ourselves in why are we seeing such a proliferation today and interest in SupTech across financial authorities? And what we found through our global research is that there are 2 primary motivations for pursuing SupTech solutions. The first is around increased operational efficiency, and the second is enhancing the effectiveness of hypothesis-driven supervision. And as we'll hear shortly, there are a number of SupTech use cases that supervisors have identified, which we'll share in the 4 categories in a moment here. And in turn, these solutions, when implemented, lead to more specific regulatory benefits. For example, in the form of improved supervisory level outcomes and impacts, such as the ability to conduct risk-based supervision. And through our panel, you'll hear a little bit more today around how specific SupTech solutions at various financial authorities are driving these outcomes and impacts. Next slide. For our time together, I'm going to focus on the 4 categories of SupTech solutions for market conduct we observed across the 14 financial authorities we researched. Then I'll introduce an example solution from each of these before we then in turn turn it over to our panelists who will share a case study example from their respective financial authorities. The categorization that you see here each align with a key supervisory activity, and our list isn't meant to be exhaustive, but rather is indicative for supervisors and is meant to complement a lot of the functionality-based SupTech taxonomies that are appearing. They are, from left to right here, solutions for regulatory reporting. Second, solutions for collection and processing of complaints data. Third, solutions for non-traditional market monitoring. And the last is document and business analysis. And I'll go into at a high level here what each of these are about. The first, around regulatory reporting, a primary method for regulators to identify market conduct risks and issues is to collect information directly from supervised institutions. Historically, such submissions have been collected manually through reporting templates submitted by mail, email, or fax, resulting in slower, inefficient, and more error-prone processes. Today, web portals, application programming interfaces, or APIs, automated data flows, or ADFs, allow for the database systems of financial services providers to communicate with the database systems of financial authorities, depending on the level of technical sophistication of financial services providers. The second category around complaints data. Complaints data is one of the most valued data sources for market conduct supervisors. SupTech solutions and complaints handling alleviate the operational burden through greater automation. And such solutions can also introduce new front-end digital channels to engage with consumers regarding their complaints and inquiries, such as via websites, mobile apps, text messaging, and chatbots. The application of advanced analytics to this data, particularly to unstructured text, represents the next step for market conduct supervisors to deduce new insights more efficiently from complaints. The third category, around non-traditional market monitoring, the internet provides the opportunity to utilize a range of new non-traditional methods for conducting market monitoring, another core activity for market conduct supervisors. Monitoring social media, online news, websites, and so on can provide an early warning signal of emerging consumer risks. Foundational to these types of solutions is web scraping, which provides a mechanism for collecting and gathering online text for analysis. Such text can be used for social media monitoring, reputational analysis in the news, consumer sentiment scoring, and dark web monitoring. Non-traditional market monitoring solutions provides a useful complement to more traditional market monitoring methods. And then the last category here, document and business analysis. Advances in analytics have been most profound in the realm of unstructured text data. For example, natural language processing or NLP solutions can ingest and analyze large quantities of documents, extracting insights in seconds, where previously it would have taken supervisors weeks, if even possible at all. And given the more qualitative nature of market conduct supervision, advancements in the analysis of text presents a potentially significant breakthrough moment for regulators. Let's go into one example to make this a bit more tangible for you all per each category. So next slide here. The first example is a supervision information system, or SIS. And this solution represents a comprehensive IT upgrade to the collection, validation, and analytics of recorded data from supervised institutions. These solutions can provide immense regulatory value due to both the direct and automated collection of granular regular data from institutions and the centralizing of such data for analysis for across the authority. This supervisory infrastructure supports authorities to conduct market monitoring and off-site examinations, which have taken on outsized importance as the logistics of on-site examinations have been made more complex due to the pandemic. If we look at the diagram here from left to right, while the exact technical deployment can vary among authorities, the diagram shown here shows how the common technical elements of many SIS solutions work. First, automated data flows, also called ADFs, APIs, or other secure transmission mechanisms retrieve and validate the data from supervised institutions. Next, a centralized data warehouse system stores, manages, and secures documents and data. This is also where data manipulations, calculations, or additional data sets can be brought in and archived. Next, data marts facilitate permission-based access to different teams of solutions. And then last, you have your end users, where business intelligence and other analysis tools equip supervisory staff to analyze and act on this data to monitor trends and risks. Within our research study, we focused on 2 authorities who use such a system. We'll be joined by a panelist from the National Bank of Rwanda, or BNR, later, who will share how his financial authority has implemented this type of solution as an update to the regulatory reporting capabilities. Excellent. We just heard about solutions for regulatory reporting. Next, we're going to hear about solutions for the collection and processing of complaints data. And the second example here is a complaints management system, or CMS. As I mentioned, complaints are a rich source of data for market conduct supervisors, allowing them to identify trends and specific instances of products or providers with high potential harm to consumers. Globally, we've seen a trend towards higher complaint volumes during the pandemic, indicating the increased need as well as the operational burden associated with complaint services. Traditional complaint handling often relies on manual processing and is often limited in the ability to interact directly with consumers as a result of outdated channels or accessibility issues with those channels. Complaints data may also suffer from the entry of incomplete, inaccurate, or inconsistent information, which limits its value for supervisory purposes. As a result, complaints departments can be overburdened and lack the necessary data to drive supervision activities. And this is where a complaints management system comes in, which automates much of the complaints handling processes, optimizes for data management for supervision, and expands the visibility and access to the public of submitting a complaint. And typically, these solutions offer 2 key innovations. First is new digital-first user experiences for complaint submission. And then the second is around the processing and workflow automations of the complaints themselves. And if you look at the diagram here, beginning from left, Consumers submit complaints in the channel most accessible to them. These submission channels include new digital channels like online forums, mobile apps, or SMS-based text engines. Next, submissions are centralized through a single case manager and electronic database, and this really streamlines complaints that come from multiple sources and channels and prepares complaints for analysis. And the last, supervisory staff and supervised institutions can process these further. Within our research study, we focused on 3 authorities: the U.S. Consumer Financial Protection Bureau, the Bank of Lithuania, and BSP from the Philippines, who each use such a system. Later on, one of our panelists who will be joining us from the BSP will share how her financial authority has implemented their complaint system. Excellent. So we just heard about solutions for the collection and processing of complaints data. Next, we'll move on to non-traditional market monitoring. Here we have social media monitoring, which is often used together with web scraping and consumer sentiment analysis as an example of a solution within this category. Supervisors use the solution to directly listen to the voice of the consumer and understand consumers' interactions with financial providers in real time. This enables supervisors to more quickly identify and act on emerging consumer risks. This solution can be used as a complement to complaints, which we just heard about in the last example. As commercial solutions have become increasingly available at competitive prices, we have seen more financial authorities piloting or having adopted such solutions. It's important to note that even though it's become more widely available, it still requires accurate topical categorizations and supervisory expertise to set up such a solution. And how it works on a high level from left to right here in the diagram. First, the solution captures social media mentions, for example, from web forums, Facebook, Twitter, Google reviews, and so on. Next, there's an intermediate step, typically a web scraping tool if it's not already available via API, which will then transform this data into an unstructured text and metadata available for analysis. And then as a last step, supervisors can apply analytics such as topic modeling or sentiment analysis to identify trends and emerging sources of risk. It's important to consider that this technology is still emerging and maturing here and still requires some level of manual review to ensure its accuracy. Several financial authorities we research use such non-traditional market monitoring solutions in complement to their traditional market monitoring tools, including the Central Bank of Ireland and the UK's Financial Conduct Authority. We'll hear from one of our panelists later from the FCA on how her financial authority is using regtech and SupTech solutions there. Excellent. And then as a fourth example, we'll introduce an example from the document and business analysis category. Many of the SupTech solutions that fall into this category focus on the analysis of unstructured text data. Each of these are applications of NLP, or natural language processing. NLP refers very broadly to the ability of computers and algorithms to analyze text and speech data. This includes the ability to infer topics in the text, classify and categorize documents, and measure other text characteristics, such as sentiment. NLP has the advantage of being replicable, systematic, and more transparent, although this is still a maturing technology and some challenges remain, including continuous fine-tuning and interpretation of the outputs for it to be useful. The ability to analyze large quantities of unstructured text data is very valuable for market conduct supervisors, given that market conduct tends to be more qualitative in nature. So this represents a very valuable emerging new tool set for supervisors. And how it works on a high level from left to right here in the diagram. First, you start with the text to analyze, such as the documents. Next, supervisors must calibrate and train NLP algorithms to extract the insights that the supervisor is keen on obtaining. And some examples of NLP algorithms include topic models, bag of words, sentiment scoring, and so on. Many document and business analysis solutions share common NLP capabilities. Practically for financial authorities, what this means is that the development of one of these solutions can assist in the development of others that also use NLP. We will list out a few use cases here that supervisors are currently investing in or implementing. And within our research, we focus on several financial authorities with such SupTech solutions. We'll be joined by a panelist from the Banco de Portugal on how her financial authority is implementing SupTech solutions there. Great. Moving on to the next slide, please. What is clear from the research is that SupTech adoption is about more than just the solution itself. It's about embedding modern technology and data to the supervisory process, and this is an ongoing effort. And the culmination of these efforts is transformation into a data-driven supervisor. However, this transformation requires investments more than just the SupTech solution itself. It also requires parallel investments in the key enablers to SupTech implementation, including people, process, and IT infrastructure. And what we found from our research is that a singular focus on implementation of individual SupTech solution was insufficient without broader consideration of these underlying enablers. And then last slide here. The supervisors we researched encountered a number of implementation considerations and questions as they implemented SupTech solutions, such as how to build the business case for adoption, what to do around legacy IT, and so forth. For both supervisors and financial services providers, it's important to anticipate common implementation considerations, such as these key decisions, what kinds of initiatives can accelerate adoption, and whether the appropriate supervisory framework is already in place to pursue SupTech as well. So with that, thank you, and I'm going to hand it back over to Jennifer.
Thanks very much, Mac. That was very informative introduction. I think as everyone can see, there's a wide range of emerging SupTech solutions being utilized that are introducing exciting new ways to gather new types of data, gather existing data more efficiently, and really to analyze this data in an effective manner for market conduct supervision. So these solutions that Mac was introducing, they're described in more depth in this new technical note on SupTech solutions for market conduct supervision from the World Bank, which you can access via a link in this PowerPoint, which will be available shortly. If we can move to the next slide. So it's my pleasure to introduce our 4 panelists. They are all from financial sector authorities in different countries who have directly implemented SupTech solutions for market conduct supervision and can provide in much more depth their direct experience with some of the implementation considerations that Mac mentioned, and can shed further light on what these solutions provide and how they benefit market conduct supervision. I'd like to briefly introduce the panelists. So we have first Charina De Vera, who is the Director of the Consumer Protection and Market Conduct Office at the Banco Central in Filipinas. She heads the Consumer Empowerment Group, which handles BSP's financial education and consumer protection work and advocacy, and was also part of the team which worked on the chatbot project of the BSP, which is a SupTech solution that she will be describing in more detail in her presentation. After Charina, we'll hear from Maria Lucia Leitão, who is the head of the Banking Conduct Supervision Department at the Central Bank of Portugal since its inception in 2011. Before that, she was the deputy head of the Banking Supervision Department, and she's also currently the chair of FincoNet, which is the International Financial Consumer Protection Organization. Maria will be followed by Kamali Wilson, who is the Director of Statistics at the National Bank of Rwanda. He oversees production and analysis of monetary and financial statistics and economic statistics, and oversees bank-wide data management, including with respect to financial inclusion and consumer protection related data. Wilson was the project lead on the development of the electronic data warehouse at the National Bank of Rwanda, which introduced a revolutionary new approach to electronic data reporting from financial providers and management at the National Bank. And last but not least, we have Francesca Hopwood-Rode, who is the head of regtech and advanced analytics at the Financial Conduct Authority in the UK. Her team is responsible for developing and embedding data science, machine learning, and artificial intelligence tools across the organization. And she also runs the FCA's regtech activities, including the FCA's tech sprints, which were the first of their kind convened by a financial sector authority. And since joining the FCA, she has led a number of strategic transformation programs within the organization. So I'd like to start with a video presentation from Charina. Ginu, if you could please start the video.
Hi, good morning, everyone, or good evening, wherever you are in the world. So, welcome to the Financial Inclusion Global Initiative Symposium. So, thank you so much to the organizers for inviting me and giving us the opportunity to share with you our SupTech solution. So, I'm Charina de Vera Yap, Director of the Consumer Protection and Market Conduct Office of the Bangko Sentral ng Pilipinas. So let me now start off with my presentation. So the SupTech solution that we adopted for the Bangko Sentral is our consumer assistance mechanism. So it is a complaints handling mechanism which allows consumers and the financial institutions to communicate between themselves and to talk about the concern being complained by the consumer. So it is an escalation point for financial consumers against financial institutions. So this means that this is just a second level platform for filing complaints, because the expectation is for the financial institutions to provide their own redress mechanism for their clients. So the first step that the client should first do is to go to their financial institution if there is a complaint or like a concern against a financial service or a product. So the consumer assistance mechanism of the BSP is also a data gathering channel on pressing financial consumer concerns, or it also gives us insights on consumer behavior as well as trends and risks in consumer protection issues. So it also gives us insights on consumer behavior as well as encourages trust and confidence in the financial system. Consumer protection is a part and parcel of financial inclusion objective of the Bangko Sentral, as well as in order to provide greater access to more Filipinos to financial services and products. So by having in place a financial consumer redress, it allows us to reach out to more people and encourages trust and confidence in the Philippine financial system. Our SupTech journey started around 2017 when we participated in the R2A project. So BSP was lucky enough to be a recipient of a grant where we were given a prototype chatbot. Service providers were selected by the project organizers, and then this prototype chatbot was then developed in accordance with our systems and requirements. So ultimately, after almost a year of collaborating with our service provider, we were able to come up with a prototype which adheres or which conforms with our needs for the complaint handling process. So what are the reasons why we opted to adopt a SupTech solution? So the reasons primarily were to enhance the efficiency and efficacy of consumer protection work, because we've noted an increase in the volume of consumer complaints. So, but still we have the same number of personnel. So responding to complaints was becoming a challenge for us, and to do it on a timely and efficient manner was already becoming difficult for us to fulfill. And another reason why we adopted the SupTech solution is to enable consumers to file complaints through more accessible means. So by having a chatbot in place, we were giving the consumers more access points where they can reach us, because currently we only have several channels for accepting complaints, which I can discuss later on. What are the features of our chatbot? The chatbot right now is called the BSP Online Buddy, or Bob. So we call him Bob, and he uses a natural language processing engine and also artificial intelligence, which recognizes complaints in English, Filipino, and Taglish. So the NLP was very helpful because a lot of Filipinos are more comfortable using the Filipino language. So by having the NLP, at least those who wanted to reach out to us using Filipino can do so, or even a combination of English and Filipino, which is what we call the Taglish. And it also provides an accessible, timely, and efficient platform for escalating complaints against financial institutions. So the turnaround time for processing complaints has been considerably shortened because the process has now been automated by the use of the chatbot. And another feature of the bot is it equips the BSP with more insights into consumer behavior, the banking practices, as well as conduct, as it serves input to our supervisory and policymaking work. Because through the BOB, we now have a database which serves as our source of information on consumer behavior as well as the trends and risks arising from consumer issues. And also, our Bob can respond to frequently asked questions. So we added this feature to the Bob to provide information not just on consumer protection issues, but also on what the BSP or the central bank does, and as well as the services that we offer. So as I've mentioned, because of Bob, we now have additional access points for filing complaints with the BSP. So now through Bob, we have a web chat feature, and also through Facebook Messenger and SMS. So these are the three new additional access points for filing complaints in the BSP. So by having in place Bob, we wanted to have wider access or wider reach to the Philippines or to the Filipino consumers. As because we noted that there were a lot of complaints coming from the urban areas or from Manila, which is the capital of the Philippines. So by having Bob, which is accessible through the web chat or through Facebook Messenger, we are hoping that more and more people will be able to reach us. So anyone who has a smartphone or with internet connection, they will be able to file complaints through Bob. And to those who are relying merely on SMS, they can still send us their complaints just by simply sending us text messages. So to know more about the features of Bob and how it works, let me now share with you a short video clip on how to reach Bob. As you have seen in the video, Bob was launched just last year around July. And then that launch was really very timely given the COVID situation. So as a matter of fact, we were supposed to do like a launch or a project kickoff with our vendor here in Manila. But a day before the kickoff, Philippines was put in a lockdown, so the vendors were not able to fly into Manila. So the project kickoff was done virtually. So as you can see here in the slide, since its launch in July until December of last year, we've had around 25,120 chats or conversations with the public, and 2,980 complaints were processed. And that's around 30% of the total complaints received by the BSP. That means that our staff was saved from processing around 2,900 complaints. So this is a very good feature of Bob, which already automatically processed the complaints that we received. So with the adoption of Bob, this in effect brings BSP closer to the Filipino people, which is also the vision and the mantra of our governor, Benjamin Jokno. So because of Bob, we are able to reach out to more people. We inform them what we do as the central bank, and also we help them in their complaints against financial institutions. So this really helps us in bringing the BSP closer to the Filipinos. Over time, we hope that Bob will be the main platform for filing complaints in the BSP, because as you've seen in the previous slides and also in the video, we receive complaints through emails, postal mails, as well as calls, and then personal visits to the office by the complainant so they can submit their complaint. So we want to have and promote Bob as the main complaints platform for filing concerns with the BSP. What are our future plans? So now that we've seen how Bob works and the potential that it can offer in our consumer protection work as well as in our market conduct work, so we intend to have further enhancements. Among these enhancements are improvement of the analytics feature to fit the BSP's needs, because we've seen that we can get more information from the public by inserting more data fields or questions in the Bob conversation. So we can get more information on the profile, the demographics, the gender of the users. So those things would fit into our financial inclusion work. And another enhancement is the possible inclusion of other dialects in Bob. So we now have the Filipino and Taglish. So we are looking at adding another more dialects and possibly the major dialects in the Philippines. And also looking into rolling out Bob through other platforms or messaging apps such as Viber, which is one of the more popular messaging apps in the Philippines. And also another feature is to give direct access to financial institutions to the platform. And other plans include ongoing studies and partnerships with other organizations to encourage more usage of Bob, because as I've mentioned, the usage of Bob is at 13% only. So we want to increase that so that Bob becomes the primary access point for filing complaints. And then as we've seen that more and more data are being gathered by Bob, and since it uses artificial intelligence and machine learning engine, we hope that as more and more people use Bob, it gains more knowledge and it becomes more intelligent. And we want to maximize that data as input to our supervisory as well as market conduct initiatives. And of course, lastly, is to enhance our market conduct work, because the data that we gather from the chatbot will give us insight, especially into consumer behavior and as well as consumer concerns, including the risks and trends in the financial products and services. So now that we are migrating or transitioning into digital products. So this will really help us to gain more knowledge about the risks being introduced by these new and innovative financial products and services. As BSP embarks on its digital transformation journey, which has been pushed to the forefront because of the COVID-19 pandemic, we believe that adoption of SupTech tools is the way forward. Technology-driven supervision tools are key to keeping with global best practices, as well as to monitor the performance of financial institutions. Overall, the adoption of SupTech solution like FOB has helped the BSP to deliver on its financial inclusion objectives, as well as on its mandate to maintain financial stability by developing or fostering consumer trust and confidence in the financial system. So with that, I end my presentation. Thank you.
Thank you, Trina, for that presentation. Congratulations for the rollout of Bob. It sounds like a very exciting, innovative tool to address consumer complaints. I'd like to hand it over to Maria Lucia now, who will share the experiences on SupTech solutions from the Banco de Portugal.
Thank you, Jennifer. Let me start by open my presentation. Okay. Okay. Thank you again, Jennifer. Hi, good morning, good afternoon, good evening to everyone. It's a great pleasure to be here and to have the opportunity to present some SupTech initiatives being conducted by Banco de Portugal, and also to call your attention to the work being developed by FinConnect. Let me start by calling attention to something you know very, very well. Consumers are now facing a complex and changing environment. Digitalization, bringing new products, new providers, new services, is putting pressure on financial consumer protection. And the authorities are taking initiatives and trying to develop more comprehensive legal and regulatory frameworks to protect, to mitigate the new risks consumers are now facing. And which means that market conduct supervisors, they have to face a very important challenge. And one, I think it's most important, is to grant to all consumers a level playing field, meaning a same level of protection at the same time to all of them. And we have millions of customers, millions of contracts, millions of data to oversee, which means we need to act timely and effectively, and for that we need SupTech, and that's I think why we are gathering today. It's to discuss the importance for market conduct supervised authorities, which are data-driven authorities. I would say our task is more and more data-driven. It's why we need to rely on SupTech. And at Central Bank of Portugal, we take financial consumer protection, meaning banking conduct supervision, since 2008, being obviously implementing a very comprehensive approach to protect bank customers. We realized in 2019 that it was important to launch some initiatives, and then we performed the pilot of one initiative in 2019, another pilot in 2020, and now we were about to implement these new projects I'm going to describe shortly. And we want to perform a pilot of another project close to the end of this year. The project I'm sharing with you today is one which is related on the oversight of draft credit agreements. We need to validate draft credit agreements because we think that it's important more and more to act upstream of the selling process. And since 2010, financial institutions, they have to report all draft credit agreements on consumer credit and mortgage to the Banco de Portugal. And we receive per year around 300 draft credit agreements, and plus we receive around 1,000 changes to draft credit agreements for existing products. What we have been doing so far, we have been relying on a manual analysis of each draft agreement, which, as you can imagine, it's impossible to do it in a very timely and efficient way. I would say that to act in a very quick way and to act using a timely approach to protect consumers, it's not humanly possible. Then we decided to rely on automation, and we were very lucky because in 2019, the Bank of Portugal decided to create an innovation lab to catalyze an innovative mindset and to support decision-making. And we were ready to ask this innovation lab to take into consideration our project. And we discussed with them, and they decided that this project, the automation of draft credit agreements validation, would be one of the first projects to be implemented. And in 2019, then the performance of a pilot started in order to assess the rules and compliance of the rules by credit institutions on those draft credit agreements. And it was possible to consider, after a period of 3 months in the Innovation Lab, that this project could be implemented. And since the beginning of this year, we are implementing this project. Now it is being conducted by our BI team, and it's almost ready to be used by the legal team of the Banking Conduct Supervision Department. This project uses NLP, machine learning, and it's ready to give the outcome of it to my legal team. Then my legal team will receive the feedback from the analysis conducted by the algorithm. They will receive the list every day, almost on real time. The information will be sent by the financial institutions to the Banco de Portugal. Then it will be stored. All that information will be analyzed by the algorithm, by the machine learning algorithm, and then the outcome will be presented in a very user-friendly way to my colleagues. And and then my colleagues can have the help of this automation and see quite quickly if those rules are being compliant, the institution is compliant with these rules in the draft agreement sent to us. Then this is something that we are going to implement through my legal team mid-July. But we have also the need for another project to be implemented. We need to have the support of our SupTech team, our innovation lab, and our BI team to implement another project, the one which was under a pilot in 2020, and it refers to the classification and automation in the response to all information requests that we receive from consumers. Bank of Portugal receives around 6,000 information requests per year, and we want to have a more timely reply to those requests. And also using NLP and machine learning, we'll be able to have an efficient, convenient, and timely reply to those requests. This project went through a pilot test in 2020, and it's going to be implemented beginning of July this year. Another project, one I mentioned before, we want to implement beginning next year will be the monitoring of advertisements through digital channel. Banco de Portugal oversees advertisements. More and more institutions are using internet and social media to advertise their products, and we need to oversee the compliance from financial institutions to the very comprehensive set of rules and regulations advertisements have to obey to. Just to summarize, I think we all agree that SupTech has a vital role to perform to help business conduct supervisors. Otherwise, business conduct supervisors will be behind the curve and consumer protection will be not effective. But let me take only 1 or 2 minutes to mention that FINCONET is taking SupTech at its program of work. We started discussing initiatives being adopted by our members. FINCONET is an organization of market conduct supervisory authorities, and it's a members-driven organization. And as I said, we started in 2016. We have been working through the support of our standing committee dedicated to oversight tools. We had a workshop on SupTech in 2019. We published 2 reports. Last one was published in November, and this report on SupTech tools for market conduct supervisors also had support of World Bank, which conducted a peer review. And we are now preparing a new report on the impact of COVID-19 on the need to move quicker and to oversee the compliance from credit institutions, from financial institutions with the regulatory, legal and regulatory framework. Please, if you want to have more information on FINCONET, please go to our website. SupTech is actually a giant leap to supervisors, but we need to take it. We need to start implementing. We will be learning quite a lot during next couple of years, I'm sure. It's not an easy task. It's a challenging one, but there is no other way. Thank you very much.
Thank you so much, Maria Lucia. That was a great presentation. It's exciting, these multiple solutions you're developing, and I know I'm very curious to see how your pilots roll out and to hear about what you learn as you implement. I'd like to hand it over now to Wilson Kamali to describe the experience from the National Bank of Rwanda, which was one of the early adopters of SupTech and developing a technology solution for purposes of the bank there.
Thank you, Jennifer. Good morning, good afternoon, good evening to all participants. Thank you for the organizing team, and thank you for giving this opportunity to speak on this important symposium. It's an honor, and we are happy to share what we are doing, and as we continue to learn also from colleagues and what is happening globally. So I'll be sharing basically the data warehouse solution that includes the SupTech and the BI part. And this solution is meant to serve all the cross-cutting departments within the bank. At the same time, also serve external stakeholders, government ministries and agencies. So next, please. Thank you. So for the interest of time, maybe we can straight go into the presentation. That is the outline. Yeah, so to start with, these were the leading questions to think of how to automate different processes. Manual reporting from the external stakeholders. Initially, it would take a reporting entity close to a week or more than a week to prepare the manual Excel based reports. At the same time, this would require a reporting entity more resources in terms of staff to compile the huge Excel reports, time-consuming and related challenges in terms of errors associated with the manual handling. So when this data submitted to the central bank, it was very tedious exercise for the bank examiners and the central bank staff to do data consolidation. So at the same time, because of consequences of manual reporting in terms of errors, delays to report, consequently, penalties, regulatory penalties were always applied to the reporting entity. So based on these challenges related with the manual reporting, triggered to think, how can we do an automation that at the central bank, we're able to get the lowest granular information that would facilitate from the central bank end, develop, consolidated and structured output reports. Next. Yes, so in addition to what I've just said in the previous slide, with automation, this has improved the timeliness of getting data. We get the data on a daily basis and on a monthly basis. From the monthly basis, we can prepare quarterly reports or annual reports. From the daily data, we can prepare weekly reports. So the timeliness and the frequency of getting data has improved tremendously. Similarly, the scope, the data coverage scope, improved the granularity of the data we collect. And this has reduced reliance on the manual process. Similarly, this has had a positive impact on the financial sector players, the FSPs, in terms of aggregating the data that previously there were previously practiced that were conducting. And this has also, we see the burden of compliance cost reducing on the side of FSPs. Next, please. Yeah, so as I said from the beginning, this process of data collection also serves the consumer protection and financial inclusion. Recently, the new law on financial consumer protection was enacted and has been gazetted towards the end of last year. And subsequently, the central bank has established a full-fledged department on consumer protection that started this year, a few months ago. However, for the purpose of reporting, the information that is being pulled from financial institutions, and maybe I should have said this at the beginning, here the central bank regulates banks, insurance companies, microfinance, mobile financial services, forex bureaus. Quite a bunch of players are regulated by the central bank. So this makes it easy for the central bank to have close to real time from the different sectors and to see what is happening in terms of pricing and future complaints. So this tool, there are quite a number of data variables on financial inclusion, at the same time on consumer protection. Next, please. Yes, so to give you a sense of the type of the granularity, these are some of standardized data templates that we had to develop. As you all know, there's quite of data heterogeneity across institutions. So we had to do some data standardization and try to define each and every variable or data that is needed. So this is just to give you example of the standardization of the data that we had to go. This is an example of information on fraud transaction. This is pulled on a daily basis from all the stakeholders, banks, MFIs, and insurers. So So as you can see, this is pulled at individual transaction sort of information at the end of the day. So maybe I will not go. This was just to give you a sense of the nature of information that we pull, where you see the guideline. So when you say fraud by, then the Y guidelines gives a more details of what does it mean, fraud type. Is it an internal fraud? Is it an external fraud? We tend to define each and everything. Next. Next, please. Yes, also this is also on suspicious transactions. As you can see, there's quite a lot of information provided for this. Really, it is very, very granular. Yes, on pricing type, on different products, this a few information that try to circle, you know, the annual percentage rate, API rate for each and every contract that is provided. What is the contract application fee? So based from this information, from our end, from the system that has also the business intelligence part, we are able to customize different reports or dashboards for the consumer protection staff going forward. As I said, the newly fledged department has just been created. So I can say there's a lot of, there has not been a lot of optimization of the information coming in. Next. Next, please. Hello? Okay.
Hello.
Okay. So, sorry, I think my internet connection is, oh, no. Yes, sorry about that. I think my internet connection is one having some challenge, but quickly, this is the architecture of the system. So we have external and internal system within the bank. Everything is being centralized in one central system, which is the electronic data warehouse. So we have the automated data flow, you can see from that arrow, and then the file uploads. So that is the push approach. This relates to institutions that don't have systems in place, for instance, Forex bureaus. So when the data is extracted, it goes through different data integrity validation. We have some technical validation rule within the system, the data validation rule within the system, so that if the data is not does not comply to the standard, the system rejects automatically to minimize garbage in. Then we have also the data marts. We have, as I said, the system has the BI platform that we are able to customize departmental reports. We have the catalogs and different analytics. Next slide. Yes, so this is just same as from the previous slide. These are different layers, the way the system is being structured. Next, please. Yeah, so from the start, when we started this 3 years ago, these were the requirements really we needed from the reporting entities, just understanding the core system they use, what applications do they use, the database type, and basically needing dedicated persons to work with us. So, and then training and working with the IT people in terms of writing scripts and views. So here just to highlight is that we don't pull sort of humanly manipulated data. So what we do is that the IT people have to write scripts that pull the data from the databases they have, and then they stage those scripts somewhere from in a staging area from which Benet pulls the data. Next. So currently the status is that we have over 600 stakeholders that are connected to this system in terms of that the data we pull and that is pushed. And this is done on a daily and on a monthly basis. Next. Yeah, so the challenges, as I mentioned, the data heterogeneity issues across the reporting entities, this required us to do some data standardization and then developing a data taxonomy or dictionary to ensure that what Bank X calls a loan is the same as what Bank Y does so. The other challenge is the data accuracy in terms of historical data. You know, you think of a KYC, we introduced some new requirements for additional information, and so you would find this information was not available from banks' database. So this required them to do some data updating and cleanup for us to be able to pull complete and more accurate information. The other is, you know, some important informational fields not really customized in their core banking systems. Data quality issues at source, because some business processes are manual from the reporting entities. This require them to do a lot of automation into their databases. So work in progress, of course, data validation, data quality management, it takes time. And to fast track the data quality management, the bank approved for establishment of a data science division to come and help to complement the other departments in terms of developing more data visualizations, analytics for consumer protection. At the same time, trying to see what are the missing gaps within the data in terms of quality-wise. Then the stakeholders in the process of automating their business processes, you will find in most of the banks, complaint and fraud handling management is something done outside the core system. So the requirement now is that they have to try and do their best to see that these business processes are automated. Next. Yeah, so thank you so much. That's the brief sort of experience sharing that I had to present. I hope you find this useful going forward. Thank you. Back to you, Jenny.
Thank you, Wilson. That was very useful. It sounds like it was a very significant and transformational undertaking at the National Bank of Rwanda. I find it particularly interesting that you highlighted the benefits for both your authority as well as providers, which I think is a good benefit to highlight, as well as the fact that you built a system that's used across the national bank, so across all departments, which I think is a trend that we saw in other countries as well, given the investment required to develop some of these SupTech solutions. The fact that it's good to consider the uses across different departments and not just for consumer protection purposes. I would like to turn, last but not least, to Francesca Hopwood-Road, who is from the Financial Conduct Authority and is going to share a number of the interesting innovations that they're working on.
Thank you very much indeed, Jennifer. And can I add my thanks for your very kind invitation today. And it is my pleasure to be amongst such an esteemed group and to share with you some of the insights from the Financial Conduct Authority. So if I could go to my first slide, please. Is my first slide coming?
I'm sorry.
It is. It's on its way.
I'm getting some internet connectivity issue. Just give me a sec.
Okay, well, why don't I start talking then whilst those slides are coming up. So we've heard from my colleagues today already about kind of the burning platform for why to use supervisory technology, and that's where I want to start, if I may, today, before I move on a little bit to talking about some of the tools that we have in use for us. So what's the burning platform for the FCA? Well, I think, and I think this will resonate with certainly probably my panel members, but maybe with the audience as well. There are three things that are really driving why we feel using and investing in supervisory technology is key for us. First of all, the scale and complexity of our regulatory remit. For those of you who are not aware, the FCA regulates in excess of 60,000 firms over a very broad swathe of activity, whether that's retail sectors or wholesale. And those range from the very largest global firms all the way through to one-person outfits on the high street. And so our ability to get across the range of data that they all submit and share with us, and our ability to understand, gain insight, and act is absolutely key. And the opportunity, therefore, that supervisory technology presents is really important. I've touched on the complexion of that population of entities, but I think what I would also say is we see that complexion of entities changing. So with new entrants, with fintech, with regtech, the type of technologies that firms are using are driving us to increase our engagement and our use of technology so that we can really regulate very effectively. And it's in that wider context of expectations, both consumer and firm, that we see a real need for us to make sure that we have the right infrastructure, the right use of data in place to ensure that we are surfacing harm, meeting our objectives across the competition and consumer protection space. Next slide, please. So how are we using supervisory technology? Just to give you a little bit of detail on our work, we have been investing in supervisory technology at the FCA for about 3 years now, and we have structured ourselves in quite a specific way. So we have a central team of data scientists that I lead, and so I have a team of about 50 people, and that team is really about driving core product tooling into the front line, and I will talk about some of those tools shortly. But the second thing we have is a range of federated data science units that sit across the Financial Conduct Authority in the front line, and this is a very deliberate approach to really ensure that the business is benefiting from that expertise, and that the data scientists are able to really leverage the subject matter expertise. And what we really want to do, as we set out here, is to generate new insights from data, inform and enable kind of better quality decision making, and improve and optimize processes. We've heard a lot about kind of today the very manual processes that exist and the role that supervisory technology can play to automate that, to strip out time expended, and then really be able to use that time to deploy regulatory judgment and expertise. Next slide, please. And these are some of the different techniques that we have got in our toolbox at the moment. We've talked a lot today about the need to analyze documents and text faster, given the vast range of information that we ingest as regulators. The need to predict harm, not just identify crystallized harm, but emerging harm. Spot the outlier firms, and that really goes back to the breadth of population we have. Amongst that 60,000, how can we spot those firms who are behaving differently, for good or ill? Analyze networks from a financial crime and enforcement point of view. How can we analyze and understand potential criminal activity? We're increasingly investing in our ability to build realistic synthetic data. And so far, we've really deployed that in the digital sandbox, which is part of our external market-facing innovation offerings. And finally, our ability to automatically ingest and gather intelligence from open source environments. So these are the range of different tools that we are developing. It's worth saying, and I think Mac raised this in his opening remarks, that one of the things that we have done as a regulator is we've opted to build our own versus buy. At the inception of our work in this space, we did more of a hybrid model. We looked at partnering with third parties, but as time has gone on, we have more invested in our own build capability. And there are a variety of reasons for that. That's not to say that that position won't evolve or should evolve as the market becomes more mature, but that is the space that we are in at the moment. Next slide, please. So I want to spend a few moments, if I may, deep diving on some of the core capability, core products that we have developed that are intended to be used at scale across the organization. And these are products that originally started life as proof of concepts that we identified because we felt that there were use cases across the organization that would benefit from this kind of activity, but actually that there would be multiple use cases. So we started small with proof of concepts, and then having proved the case, proven the utility, proven the value, we have moved over the last 12 to 18 months to building our own. So if I can just deep dive on a couple, and particularly one that Mac picked up from the report that we fed into, is around our natural language processing tools. So one of the things that we have experienced as a regulator, as I'm sure colleagues do, is that we receive, whether it's through policy consultation documents, at the gateway when we authorize new firms, we receive significant amounts of unstructured text information. And text analytics really helps us and our colleagues across the organizations to identify which documents are the most relevant, find the relevant parts, and really get an overall view of their content by comparing them. So we have developed two tools which really complement one another but are targeted at different user groups. So the first is about Text Explorer. It can be used by fellow analysts with some coding experience to clean up and analyze text-based information. Sleuth is for use by a different audience, and it can be used by someone who isn't a data analyst. So again, making sure that a tool can be used at the point of self-service, if you like, by colleagues across the organization. And the user can upload a set of documents and run a search for multiple keywords. They can then quickly find the most relevant documents and the most relevant part of the documents, and then view statistical information about the documents searched along with extracts, for example, showing the context found. It's a bit like using a very advanced Control F function. What we are finding is that both of these tools have already helped to speed up really quite significantly. So we're talking about days of time being stripped out of previously very manual processes to help our colleagues in the front line really get across vast swathes of information that they are having to ingest. So there is a manual benefit to this, but there is also a quality benefit because they are being able to get across swathes of data in a more automated fashion. And in doing so, that is stripping out human error, it is stripping out subjectivity, and it is really therefore driving some better quality outcomes. I just want to touch on two more quickly. So on Vector, which is one of our, it's a network analytics tool, which is increasingly important for us. So this tool is really about helping to spot links and identify suspicious patterns of ownership. And this is really important at 2 points in the regulatory life cycle, at authorization and at enforcement stage. So what this enables us to do is it enables our authorizations colleagues to identify the relationships when they see a firm or an individual coming for authorization for the first time. It can identify if that individual or if that firm has been involved in other activity which we have taken enforcement action against, because what we sometimes see is something called phoenixing. when a firm who's been involved in nefarious activity folds and then phoenixes as a different entity. And this tool uses open source data and FCA data to create patterns and networks and visualize those networks so that our colleagues can very quickly surface in a matter of minutes the relation and visualize the relationships between different entities using bringing together those two different data sets. I'm just looking at my watch because I am conscious of time, and I know that we have 10 minutes left for Q&A. But I will wrap there on the two deep dives. But on the next slide, I have supplied my contact details so that if people wish to follow up, so if we could go to the next slide, please. If people do wish to follow up and have more of a deep dive or more information on any of the tools or the approaches we have taken to supervisory technology at the FCA, I'd be more than happy to talk. Thank you, Jennifer.
Thank you so much, Francesca, especially for moving through such interesting content so quickly. I think as hopefully the audience has seen, the range of experiences across these four authorities is fascinating and a lot to learn from in terms of leveraging different SupTech solutions and having different implementation approaches towards this. So in our remaining time, I'd really like to get to some questions for our panelists based on their very relevant and fascinating experience. And please feel free to submit questions as well. We'll try to get to some of them. I'd like to start with Maria Lucia. If you could turn on your video. So you described that you're piloting 3 different types of solutions. So reviewing credit agreements and addressing information requests from consumers, and also starting to develop a pilot on monitoring ads. I'm curious if you could describe a little bit about what was the thought process behind, there's a range of different SupTech solutions we've discussed, and there's a range of different activities that you need to undertake as a market conduct supervisor. How did you prioritize and determine where to start, which types of solutions, which types of information you wanted to focus on in terms of thinking about why did you start with these 3?
Yes, thank you, Jennifer, for the question. It's a quite challenging question because for us as banking conduct supervisors, we have so many needs. Yeah. But I would say that in terms of structured data, I didn't mention, but you have already very developed systems adopted. I would say that we were much more developed on managing, receiving information from institutions, managing information internally, using it in a very efficient way with our experts on diet scientists and our different software systems, very complex, that we were, I would say, we are considering that there, in that perspective, we were, I would say, receiving very good service. But we were considering that more and more we need to act timely, and the problem we consider that would be prioritized or should be prioritized would be to work with unstructured data documents. We receive so many documents. We have to act, as I said before, upstream. We have to protect consumers before the selling process starts, and then receiving so many, for instance, draft credit agreements. Then there was a need to opt for that. And as I said, the option from the central bank was to internalize all this project, obviously with support of external partners, but to at the same time to have it as a first project in our innovation lab. And then it was for them also quite interesting to have this project because they could test NLP, machine learning, and so on. Then for us, we are very much happy, very happy with this approach. And then we are creating, externalizing what everyone is learning from this approach. for information requests. We need to hear, it's not the size of the information we need to assess, but it's more the need to act very fast, to reply very fast to the requests from consumers. And last one, social media. I think we all need, and there is lots of different projects being implemented. We need to go to the social media, need to go to the internet, and to oversee advertisement, to have the analysis of the sentiment of the market, to get all the information gathered from there. It's humanly impossible. We need to rely on AI, on SupTech. Meaning there was a discussion, and I think it's very important maybe to stress, is to have a very close discussion, a very close partnership between the Market Conduct Supervisory Department and the IT team, be it BI or before that, Innovation Lab. This, I think, is in our perspective, the most important approach to get what we need. Let us see. Thank you.
Thank you. Thank you so much. That's super helpful to understand the thinking behind how you approach these solutions. If I could turn to Wilson with a question for you, partly from the audience, but also partly from what I know from your experience. It would be great to hear about what were the barriers that you faced in implementing your solution. And in particular, one of the questions was what are the challenges that might be posed by legacy IT? And I know that that's one of the barriers in implementing your solution, including legacy IT at the provider level. So if you could describe some of the challenges you faced and how you approached that briefly, that would be helpful.
Thank you so much, Jennifer. In the process of implementation, the big barriers we faced is that the kind of the data that was lying within the reporting entity being not consistent in terms of definitions, in terms of, it was always based on internal institutions policy, and also the data gaps, because institutions having different core banking systems or MISI, and here we are introducing more additional information. For instance, talk about suspicious transaction fraud. So so those were the barriers of the heterogeneity in terms of the data. But and so how we had to come, as I mentioned, we had to do some data standardizations and try to develop data dictionary so that data is defined in the same way across the industry. So that is how we approached that problem. And also this triggered to the reporting entity to try and automate the business processes as much as possible. You maybe in the developing world, you may have had experience. You go to apply for a loan, for instance, you do application in paperwork, and the management of the loan processing to the level of contract signing, everything. There's a lot of that process is not normally done within the core banking system. So here it requires reporting institutions to try and automate that process so that you can fast track and see the speed of providing service to the consumers. So this, by doing so, it triggered the reporting entity to try as much as streamline their business processes. And the other challenge, of course, you could say is, of course, the big challenge is about the data quality, because if that information is not captured by the reporting entity from the first point of view, then when we pull, the system pulls garbage in, garbage out. So what we have done in terms of ensuring the quality of information, whether relating to fraud and whatever, is that we have done some data integration, implemented data integrity rules within the system. If you say my salutation is Mr., so my gender should not be female or should not be corporate, for instance, something like that. So we have those validation. The other point that we are working on is data usage, which is our next logical step in terms of ensuring data quality. And as I mentioned, the bank has taken decisive of putting a specialized team and division, which is made of data science, to come and make use of this data to support the bank in terms of policy, data-driven policy decisions, so which include, bringing now on board unstructured data. Colleagues have already talked about, how to use unstructured data to understand what is happening. So this is what the team will be doing going forward. So of course, IT legacy problems, as I mentioned, so being not having complete information, or it's an outdated system. So so most of these institutions are trying to update their systems. They are trying to create more interfaces with different systems, things like that. So so yeah, thank you.
Thank you very much. Thank you to all our panelists. I'm sorry, we will have to wrap up, and we won't be able to answer all the questions. I had more as well, but I want to thank all the panelists and Mac, of course, for presenting such fascinating and exciting new approaches to SupTech for market conduct supervision. If I could ask all the participants to please complete the pop-up survey that will show up right now. And I'd like to let everyone know that the next session in the FIGI Symposium today will start in half an hour and is on cybersecurity and trust, covering the role of central banks in enhancing cyber resilience for the financial sector. Thank you all again. Thank you for all the participants, and thank you all for joining the session. I hope you learned as much as I did.
Thank you.
Hello.
Hello, for those joining the cyber session, just please log on once the session